Welcome to The Explainer. If you've ever felt like the stock market is some kind of exclusive, complicated club you're not invited to, well, this one's for you. We're going to break down the absolute basics of investing, starting right from square one.
All right, let's dive right in. And I want to start by challenging a belief that, honestly, most of us were taught about our money.
You're probably thinking, yeah, of course it is. Saving is the smart, safe thing to do. And look, you're not wrong. But what if I told you that by only saving, you might actually be losing money over time? Let's walk through a little scenario to see what I mean.
Okay, so imagine this. You're super disciplined. You're saving 20,000 rupees every single month. Your income's growing by a healthy 10% each year. But the cost of living, inflation, is creeping up right behind it at 8%. You do this for 20 solid years, just saving, letting that cash build up. So after 2 decades of that hard work, what do you end up with? 1.7 crores? I mean, that sounds like a huge number, right? You'd think you're set for life. But here's the scary part. This is the real gut punch of inflation. That 1.7 crores, it would only cover your expenses for about 8 years once you retire. 8 years. And then poof, it's gone. That right there is the hidden trap of just saving.
Okay, but hold on, let's rewind that 20-year story. Let's change just one tiny detail. What if, instead of letting that hard-earned cash just sit there, you put it to work? What if you gave your money a job? What if you invested it?
Okay, so now let's say you get a pretty reasonable 12% return on your investments each year. Look at that number. Your savings don't just grow, they explode to over 4.26 crores. That is more than double. Seriously, it's not magic. That's just the incredible power of making your money work for you.
And this is so important to understand. Investing isn't some get-rich-quick scheme. It's actually about playing defense. It is the single best way to protect your hard-earned money from being slowly eaten away by the rising cost of, well, everything.
Okay, so we've established that your money needs a job. Great. But what kind of jobs are available? Where do you even start looking to invest?
Well, you don't just blindly throw your money at something called the market. It's way more organized than that. You invest in different categories, and the official term for them is asset classes. Think of them like different types of tools in a toolbox, each one designed for a specific job, with its own level of risk and its own potential payoff. Let's check out the main ones.
First, you've got your fixed income. This is the reliable, steady workhorse of the investment world. We're talking things like bank FDs and government bonds. They're generally considered pretty safe, and the deal is simple. They pay you a fixed, predictable amount of interest. Then you've got equity. Now, this is where things get exciting. This is the high-growth potential player. When you buy equity, you're literally buying a tiny piece of a company, a share. You become a part owner. Now, with that high potential for growth comes higher risk, for sure. But the potential rewards, they can be huge. And of course, there's the one we've all heard of, real estate. This is the stuff you can actually touch and see. You're buying a physical property, maybe a piece of land, an apartment, an office building, with the goal of either renting it out for income or selling it for a profit down the line. And last but not least, we have commodities. The big ones here are precious metals. You guessed it, gold and silver. These are often seen as a safe haven. When the economy gets a little shaky, people tend to flock to gold to protect their wealth.
So let's put them to the test. How do these different options perform over that same 20-year period? Well, gold or bullion gets you to about 3 crores. Not bad. Fixed income does a little better. But then, look at equity. Assuming a historical average return of 15%, it just leaves everything else in the dust, taking you to a massive 5.4 crores. That right there is why equity gets so much attention. Okay, so seeing that incredible potential in equity brings us to a really important question. Where do you actually do this? What's the main stage for buying and selling these company shares? Well, you've heard the name a million times, the stock market. But what is it really? Honestly, the idea is so much simpler than you might think. Really. Think of it like a giant supermarket. But instead of fruits and vegetables, the shelves are stocked with shares of different companies. It's just a place that brings together people who want to buy shares with people who want to sell them. That's it. And forget those old movie scenes of people shouting and throwing papers around. The stock market isn't a physical building you walk into anymore. It's all electronic. You access it right from your laptop or even your phone.
Here in India, the two big marketplaces, or exchanges, are the BSE, the Bombay Stock Exchange, and the NSE, the National Stock Exchange.
But wait a second. You can't just, log on to the NSE website and start shopping. It doesn't work like that. To make sure everything is fair, secure, and that your money is safe, there's a whole system, a whole team of players working behind the scenes.
Now, it might look a little complicated at first glance, like a giant flowchart, but trust me, as a beginner, you only need to know about 3 key parts of this whole setup to get started.
Let's break it down. Think of it this way. First, you need a referee. That's SEBI, the Securities and Exchange Board of India. Their job is to set the rules and make sure nobody's cheating. Next, you need a gateway. This is your stockbroker. They're the ones who actually give you access to the market. And finally, you need a vault. This is the depository, and it's where your shares are kept safe and sound electronically. So, when you go to a broker, they'll help you set up 2 essential accounts. It's really important to know the difference. Your trading account, think of that as your shopping cart. It's what you use to place your buy and sell orders. Then there's your DMAT account. That's your secure digital vault where the shares you buy are actually stored. These 2 are then linked up with your regular bank account, making the whole process of moving money and shares super seamless. Okay, let's do a quick recap. What have we covered? 1. Just saving your money isn't going to cut it, thanks to inflation. 2. Investing puts your money to work to beat inflation and actually build wealth. 3. The stock market isn't some scary monster. It's just a digital marketplace for company shares. And 4, and this is the big one, it's a safe, regulated system built to protect investors just like you. So, there you have it. The intimidation factor? Hopefully it's gone. We've peeled back the curtain. You now know why it's so important to invest, what the stock market actually is, and who you need to get started. The whole thing should feel a lot less like a confusing maze. So that just leaves one final question, and this one's for you. What's your first step going to be?